Hello, and welcome to Tax and Tech, a Deloitte podcast focused on helping you navigate the ever-changing tax technology landscape through insightful conversations with Deloitte technology leaders. I'm your host, Emily VanVleet, a partner in our tax management consulting practice here at Deloitte. I'm so glad you can join us. On this episode, I'm also very happy to be talking with Brad Ford, who is a principal in our tax management consulting practice. And our conversation today is going to be building on a recent webcast all about the data forward tax department. And so that's really all about how a focus on data management for tax can help to drive digital transformation of the tax function. Before we get started, just a few housekeeping notes. Please be sure to subscribe to Tax and Tech wherever you're listening to this podcast so that you don't miss any of our episodes. Other upcoming episodes will cover data wrangling and automation for tax specifically. We'll be talking about tax operating models. We'll be sharing the results of our 10th annual Global Tax Management Survey and other timely topics. And to find more of our tax technology thought leadership in these areas, please also check out Deloitte.com under Tax Management Consulting. So with that out of the way, Brad, why don't we kind of dive into a conversation around data management for tax?
Awesome.
So I'll start just with a really broad question for you. Our webcast was titled The Data Forward Tax Department. So what does that mean to you? What does that type of end state really look like for a tax department?
Yeah, thanks for having me. This is something that has been a dream of mine for a long time, since I was doing and preparing tax returns, as a staff in an actual tax function. Some 20 years ago now, that we would basically get to a spot where data was leading the path forward for us, and that would allow us to basically automate things to get to end results. And I think with the technology, with data wrangling and different things being so user-friendly today, that we're finally in a spot where data can really just drive us through a process instead of hanging us up on being more efficient within any given process. So it's just data first, right? And then the process second.
Okay, and it sounds like the impact of that is that it helps tax professionals really be a whole lot more efficient, right? And I imagine that means focusing on more interesting things instead of, as you said, pushing data around through spreadsheets and paper.
Yeah, I didn't know when I graduated college and with a tax degree that really I was going to spend my first 3 or 4 years, right, just improving spreadsheets and not really thinking about the tax, but hopefully future generations won't have that same problem.
Yeah, that's right. Okay, and you also just mentioned, Brad, the term data wrangling. So let me ask you to just quickly explain what you mean by that. We have different people joining us for these episodes at different points in their journey. So when you say data wrangling, what does that really refer to?
Yeah, and data wrangling for me is basically creating a standardized process for pulling data in, transforming that information, doing the steps to it that you would have normally done for tax professionals in Excel and that type of stuff, and then getting it formatted to go downstream to whatever that step may be, whether it's to load it into a software or even load it into work papers. So we commonly use the extract, transform, and load acronym as well, ETL, and basically just transforming information in a standardized process. So we're removing the risk and really creating structure to how we interact with data to allow us to do future process improvements.
Right. Okay. So it sounds like really kind of focusing on how data is used end to end through a process rather than just, kind of focusing on a single calculation and then maybe, having a disconnect between all of those different Excel packages that we're using today.
Yeah, that's right. I mean, my example always is that, a trial balance ends up in every single work paper package in preparing a federal tax return, right? And so can we not get to a spot where we centralize that source of that trial balance, and that feed of that information to the downstream processes is more centralized and controlled and doesn't require that one step to be reviewed 100 times as we prepare 100 different work papers to support whatever our activity is, a return or even an individual tax adjustment in some cases.
Great. So, Brad, I know you also often talk about rolling out this type of data management strategy in terms of a series of modules. So can you describe for us what do you mean when you talk about modules? Just kind of help us better understand that approach.
Yeah, I like to oversimplify things, but if you break things down into pieces, things seem to get easier, at least for me. And so I usually talk about data wrangling in a kind of a 3-module approach. We break the process of interacting with information data that goes into whatever process into 3 buckets. So the first one is basically acquisition and validation. So you're basically taking all the information that's going into the process, getting it formatted, validated, structurally put in a table and having a clean output so that we can use it for downstream processes in Module 1. And the big key about Module 1 is that if we get that right, we can always end up shifting that back over the fence to finance or IT to just provide us that table at some point. But reality is we too often in tax are doing that step because we have multiple ERP systems to deal with or multiple sources of data to ultimately do the task at hand. And so that burden falls on tax. But if we can structure that piece and get a nice clean table coming out of Module 1, then that makes all the next steps easier. In Module 2, we start to enrich the data. So Module 1 should only be about validating the source of information. In step 2, we just start to enrich that table. That table gets enriched with whatever tax wants to do to that information. So if we keep it simple and just say it's a trial balance we're pulling in, then we're basically going to pull in things like, hey, is what GL account is associated with M&E as a tax deduction, or which sales accounts are being used for what type of apportionment per state, rent, whatever it may be. And then once we have all that information stored next to that data, we can then go downstream in our 3rd module to retake the portions of that data that we're wanting to put into individual processes. So that data could be loaded to the M&E work paper and automate it end to end, not only the tax adjustment, but the actual support as well. Or we could take all that information and load it to whatever tool we're using to do the tax return pieces. But, basically dividing up those steps will allow us to do even more tomorrow, right? And we can talk about some of that stuff, but Module 1, grab it, validate it, make it a clean table. Module 2, enrich it with whatever tax wants to always associate with that data. And then Module 3 is where end users can start to use that information for whatever downstream process they need to put the information in.
Got it. And so practically speaking, how do you see companies starting to implement that type of approach? I mean, do you start with federal? Do you start with a subset of federal? How do you see that journey typically started?
The one that's on the income tax side is to basically start with getting financial information into the compliance process. Mm-hmm. So commonly referred to the book return. In history, at least in my world, the book return has usually been a phrase limited to just the domestic calculations, so the 1120 or 1065. But people are starting to expand that thought process, especially with tax reform, out to getting all the financial data into also the 5471s and other international forms. And basically what that does, it says, hey, look, I have to have an all-inclusive data source for all my trial balance information, financial information landing in the returns. And in some cases, that also includes transactional information. So take the M2 on the 1120. We have to do retained earnings type individual data, right? So if we pull the transactional detail through this same process, right? Module 1, we don't just grab the trial balance, but we also grab transactional detail for certain accounts. We can start to then map that information through that module 2 and land all that detail into our compliance software. So we have structure on that. And basically what that would intend to do is two things. One, make next year's process where we're only dealing with the exceptions. So what is new, right? What transaction types are new, what GL accounts are new, and what we're going to do with them, instead of us having to basically roll over and start from scratch with all our work papers related to that process. We can just roll whatever data wrangling tool and then basically only deal with the exceptions for the next year. And then the second is, now that we have worldwide data in one spot for compliance purposes, we can start to enrich it for, whatever other processes we want to deep dive into. So state apportionment, the Schedule M and 5471s around intercompany. And if you got legal entity issues or currency issues, like those things can start to be pulled in on top of that structure we created with, starting with that financial data for just populating the returns. And then it could be used for provision and that type of stuff too. But those returns is the most complete spot.
Yeah, and then you also have a good, reliable data store you can use for analytics and dashboards as well, which is something that I know many of my clients would like to do.
That's right.
Okay. So, and another point you've made, Brad, that I think is important, and so let's emphasize it one more time, is the fact that as you're compiling that table of data in what you refer to as Module 1, you're getting clarity around how source data needs to be manipulated. And so then you have something that you can go back to the IT team or to the accounting team, and you can actually start working on some of those fixes in the source system so that you don't have to manipulate the data so much as you move forward.
Yep. No one could see me, but I was nodding my head the whole time. So yes, absolutely. That is so key.
Okay, awesome. How about the approach to data throughout the enterprise? Shouldn't the tax data approach integrate and not be done in isolation? And I feel like in the comments we just made around source systems, we were probably kind of getting at the answer to that question, but what are your thoughts on that question?
Yeah, solve the problem upstream where the actual information originated from, right? So to the extent we can move upstream, utilizing the IT resources within the company and or finance resources to get those things fixed, then that's great. Reality always ends up being something will change year over year about the business, and we won't know until we're actually interacting with the data. And that so often is what causes the delay and distracts us from risk management or planning and, cash planning, because we get distracted in the moment while we're doing our task with all the financial data. So for me, having these platforms and separating Module 1 and Module 2 from each other really allows us to still absorb that information and deal with, in a structured format, what is changed about the business on a year-over-year basis, and then continuously improve the enterprise, the data at the enterprise level, right, within the ERP or whatever it may be. But business always ends up changing something, and tax doesn't find out until we actually start interacting with it. And then my last comment to it is, if we get to these structured systems, like we're talking about, we can start to do this more frequently. So right now, tax lives completely in the past, right? So for the most part, we wait until books are finished, right, at year end or in a quarter or what have you. But, if we get this right, we can start to quickly run test scripts on this stuff throughout the year and start to deal with the business change throughout the year instead of waiting until they're done, so that we can, one, impact it from a planning perspective, but two, just not have to deal with volume all at once. And we can kind of put it throughout the year, flatten out taxes, life cycle, to say.
No, I think that's another absolutely critical point. And so if you have your data manipulation and data transformation steps in these types of automated, repeatable workflows that these technologies support, then you can absolutely run those faster, run them more frequently, run them even before the books officially close. And it's a very different process and a very different effort level versus having to prepare a bunch of different Excel files to get a sense of what's going on in the data.
Yeah, fixed assets is one that comes to mind with that all the time, right? Too often we're waiting for, property and apportionment factor or fixed assets for, the returns at the end of the year. And if we get into these data wrangling tools around how we absorb that information and get it ready for the returns, we can definitely start doing this much better. The big thing too with all this is if we're going to take like a 8-hour process, right, human time, and we're going to put it in these data wrangling tools and just say we take it down from 8 hours to an hour worth of work, we should also at that same moment not just replace the existing process. We should also start to enrich it. Like you said, your clients are trying to get to analytics and these types of things. Like we should at this moment put in things we wish we were doing because we just saved 7 hours worth of time, right? So we should, make it an hour and 20-minute process. But because we're in the automation world, we could have basically taken what would have been a 20-hour human process and made it an hour and 20 minutes if we start to think about what we wish we were doing at the same time.
Right. Okay. Great. Well, Brad, this has been a great conversation, I think. Let me just ask you kind of one question in closing. And I loved how in your opening you kind of said that you've dreamed throughout your career of kind of reaching this point. And I know that you are passionate about helping tax departments figure out how to really accomplish what we've been talking about. So if you just had one point to leave behind with our audience, what one thing should tax departments be focused on right now to start moving the needle toward becoming more data focused?
Just get started. If you don't use these tools and this thought process to go as far as some of the conversations we've had today, at least get these tools in inventory and start using them within your tax function, because even if it happens slowly, this stuff will be a part ingrained in the future of tax for everyone. So just get started. Think big, start small, and act fast is better than not starting at all.
Mm-hmm. Okay. Awesome. Very good. Well, Brad, thank you so much for talking with us today and providing your perspective around data management for tax. And a big thank you as well to everyone who's been listening in with us. Until next time, this has been an episode of Tax and Tech with Deloitte, and I hope you'll join us again as we continue to chart the tax department's digital future on our upcoming episodes. Thanks very much.
Thanks.
And finally, I would encourage you to subscribe to our Tax and Tech podcast series wherever you are listening in today so that you don't miss any of our episodes. We have episodes coming up around cloud ERP systems, tax technology updates related to U.S. tax reform, and many other timely topics connected to tax technology. So a big thank you to everyone listening in. I hope you will join us again as we continue to chart the tax department's digital future on another episode of Tax and Tech. Thanks very much.